Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the challenge is on for both the euro dollar and for the US dollar due to the recently posted engulfing Japanese candlesticks, as the levels are now being challenged on both sides. With the dollar index at 92.50, as you can see here, the market on Friday fell sharply but held or respectively around that level. And with the euro, we can see the market is now challenging the level at 117.95, but it hasn't broken there. To support a change in the trend, we need the US dollar to close beneath 92.50. And looking at the euro, we need a close above 117.95. This would initiate the move down to, for the dollar index, at 92.15. And for the euro, would initiate a move up to 118.65. Until then, we'll have to wait for tomorrow's close. Now, what started the move for the US dollar index is that we got a surprise reading from the consumer sentiment index, which plunged on Friday to a lowest level in a decade. That is around 70.2 after missing the forecast of 81.2. Looking ahead, though, the up and coming week, we've got US retail sales on Tuesday. Along with that, we have the housing starts and also the release of the US Federal Open Market Committee FOMC minutes on Wednesday. Speculation is mounting that the US Federal Reserve Chairman Jerome Powell could signal it is ready to start easing monetary support in a speech delivered at the annual Jackson Hole in Wyoming conference, that is, on the 26th of August to the 28th. We will see if the Powell talks or discusses the tapering of the 120 billion in monthly stimulus that the central bank has been providing to support the economy due to the COVID outbreak since March 2020. So as I mentioned, let's see where the closes are for the euro at 117.95 above is bullish and under 92.50 for the dollar index, which is bearish. The Australian dollar started off on a slightly bullish note. However, seems the market found a little bit of difficulty in sustaining those gains after the reaction from investors of the Chinese economic data for July. With the recent virus outbreaks in China, that is returning, have weighed on the Chinese economy after the retail sales missed a 10.9% forecast and rose by 8.5% in July. While the industrial production grew by 6.4% in July, almost falling, that is, short of his expectations of 7.9% year on year. As I mentioned, though, eyes do refer to some of the economic data this week that is a little bit more sensitive. That is, keep an eye on Powell and also keep an eye on the minutes from the RBA tomorrow. For the moment, though, for the Australian dollar, eyes on that 73.25 support and could see a further slide towards 72.85, where I believe, like previously with this bullish outside range day, could see a rebound from this level, but still locked in coming into the fifth week now of this range of 72.85 to 74.25. The call for dollar yen was down to 109.55, where we reached that. Now we're looking lower towards the region seen at 108.55.80 and reassess from there. We could see a bit of, or should I say, return of bullish traction due to that strong outside range day from this region after the previous decline. Nevertheless, the eyes are on that support as the technicals are still strengthening up to the bear case, mainly to the RSI, but the MACD is also just breaking beneath that zero axis, which does give a view towards that bottom side. Either reassess or do look to maybe sort of taking some of your position back or put in a stop loss according to your risk management. Looking at sterling, well, the market really much closed flat on Friday. Since the bullish outside range day, then we got a very heavy candle, and now a strong candle coming back has left the market a little bit puzzled in direction. I believe the market could actually slide a little bit lower to 138.20 or maybe down to 137.75, but the base is still holding around 137.15.20. To remain negative, we do need to see that level where I've highlighted there at 138.90 to stay intact. Looking at sterling yen, the bears weigh on the market heavily and now looking towards the next target, which is somewhere around 151.45, or maybe even extending a little bit lower. That is down towards 150.70, and reassess from there. The strength of the yen has supported this move down more so than the sterling leg. Gold has rebounded very strongly on Friday and taken out the level of 1,768, which has reinstated the upside. Now, it's a long way away to turn the market bearish again, and that's at 1,748. So it's going to be a little bit risky into trading this market due to the wide parameters. But nevertheless, as long as we remain above 48, then the target is back to 1,800 and reassess from there. Oil slip for the third day and still very much on track, I believe, from the technical aspect that supports this view is that we're heading down to 64.70 to 64.80, where the challenge previously of twice, that is, around that level. With the market weighing and the technicals holding and the trends actually picking up here for the ADX supports this view. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new